All right, why is everybody overpaying for certain asset classes right now? Well, number one, they need returns, right? So when there's plenty of money given out, everybody's on the same playing field, really. It's a different ball game when it was 10 or 15 years ago and only a few of us had some cash. Well, now we all have cash. So what happens to the high yield investments? Well, they shrink, right? Because everybody else can buy the same 7, 8, 9% return. So those investments are few and far between. Now you'll notice, especially in multifamily, they were getting as low as 4, 4.5, right? And that's typically not common historically. 4, 4.5 is really not where you see things. This has to do with a lot of interest rates. This has to do with a lot of investment groups. A lot of big money is coming. Because the truth is, most of the time, an average investor would not pay cash for a property. They usually borrow the funds. Banks now, they're pulling back a little bit. You'll notice they, where they used to do, sometimes they used to do 80%, right? They used to really push up there. Now they're a little more timid. They're pulling things back a little bit. They're going into the 75% pool. And certain asset classes, they're going all the way down to 60, 65%, right? In retail, they're really not sure how retail is going to shake out. Office, I know, is really a tough one as well. So the reason these large groups, so let's say some investment group out of New York, and maybe they have, I don't know, $200 million for this example. Why are they willing to overpay and get a 4.5%, 5% return where nobody else would do that? Well, it's simple. They have so much money that they're borrowing, and they're probably getting it at 2% or something like that. And they have such a large pool of cash that for them, 2%, 2.5% is a lot of money for their investors in their world, right? So it really blows out the competition. Another thing also, in terms of safety, multifamily is generally a safer asset class. Now, it's not bulletproof, and it will, and it can take a huge beating, just like everything else, right? If they stop the whole, hey, you don't have to pay your rent anymore, well, that's going to be a little tough on those landlords. And whatever they do. So it can take bruises just like everything else. Nothing is bulletproof. Absolutely not. Don't believe that for a second. But it's the safer ones, right? It's the one that has the less risk from certain standpoints. Now, the other thing is it has steady growth. So if you think about it, let's compare multifamily to a retail spot, all right? And if you have a renter coming in, and they're buying, they're getting a 2-bedroom, 1-bath. They're generally staying there for about a year, maybe a year and a half. Well, what happens if the rent their first year is $1,000? Well, the next time when they renew, it's gonna be $1,100, and then when they renew again, it'll maybe be $1,150. It'll grow up incrementally every single time. Now, if you have 50, 60, maybe 150 units, that's the same growth. It's going up slowly, right? Now, in a retail property, it doesn't work so much that way. Most of the leases, what if it's a restaurant? Maybe they have a 5 or a 10-year deal. It goes up 3%. Most of the time, it's built into the lease. They can't really increase the value that quickly. Warehouse, for example, industrial properties might be a little tougher. Long-term gain. Same thing with office, same thing with everything else. Multifamily is the only one that you can really insulate yourself against a lot of bruises. The other thing you want to notice, banks typically like these types of assets. From what I've found, it usually beats out any other asset class. Most banks don't like retail. Most lenders don't like retail. Warehouse is okay. It's really the strength of the property is based on the borrower, or the tenant, I should say. I apologize. It's whatever that tenant has. So if you have a 15-year lease, and that's a really strong tenant there, that's generally what they're going to look at. They don't really so much care about the property in you as the borrower. Same thing with retail. It's the strength of the leases. So when they do a stress test on a multifamily property in a larger apartment, that's kind of how those advantages take into place. So just be very careful in what you're going into, and hopefully that answers a lot of the questions maybe that's been bugging you. So if you have anything else, let me know. I'm here to help you out.